Welcome to the Great Canadian Piggy Bank, helping Canadian parents raise money-smart kids. Today we're diving into the world of TikTok money advice and how to tell what's real, what's risky, and what's just plain wrong. If you've ever worried your kid will fall for financial hype online, this episode will help you and them spot the red flags and find voices you can actually trust. My guest is Richard Coffin, better known as the Plain Bagel, a CFA, CFP, and a famous financial YouTuber who made it his mission to call out misleading Finfluencers and highlight the few who get it right. Hi, Richard. Welcome to the show.
Hi, thanks for having me on.
Can you briefly share what the Plain Bagel is about and what led you to start reviewing Finfluencers, acknowledging that you are also a Finfluencer?
That's right. Yeah, it's a strange circumstance to be in for sure. So the Plain Bagel is a very broad economics and finance YouTube channel. It started off covering very basic concepts aimed at beginner investors. And as I've spent time on social media and developing on the professional side, there's been content promotions and things I've come across that strike me as bizarre and dangerous in the space. So while I've been very broad in the topics I cover, there has been this side of me that's always looked to focus on these situations as they arise, whether it be those promotions from finfluencers, as we're commonly called, the finance influencers, or just things happening in the finance space at a broader scale. There's so much that's happening these days that's hard to keep track of, and unfortunately a lot of nefarious activity. And so I have a particular interest in kind of highlighting that stuff when it comes to the surface.
So, why can bad financial advice online be so harmful?
Financial advice online has part of why it's so popular is that it's highly accessible. The people you listen to often do a very good job in explaining concepts, breaking it down in an approachable and beginner friendly manner. And one credit to a lot of influencers is they know how to keep people's attention. As the name implies, they have influence because they've gone around building trust with their viewers. The issue is that, especially within the finance space, the promotions and the advice you come across that perhaps doesn't have the expertise to back it can be additionally problematic because you have that trust that viewers have established with this person without necessarily it being warranted when it comes to financial advice. And in many ways, it can be positive. One thing we've seen is that influencers have actually helped increase financial literacy, especially
Absolutely.
with the main basic topics. And they've actually encouraged investing activities. So there's one survey that found roughly a third of Canadians attribute finfluencer content to them getting started investing. So that's a great positive because, as most professionals know, the earlier you start investing, the sort of better performance you can experience because you have longer period to compound over. The issue is that bad advice can really hurt someone's personal life. And B is the lack of expertise we have around the topic that's really circulating. There's actually this strange situation that's set up where most professionals aren't allowed by their employers to have social media profiles. So you end up with this situation where those who have the expertise and background to maybe give positive guidance are not allowed to do so. And those who don't have that background are able to do so freely without many barriers.
So, if a lot of professionals aren't able to have social media handles, what are the laws around giving financial advice? And why are we not regulating online content?
So it's really tricky because, for one, this type of content is fairly new. So we don't have laws that explicitly address it. But the precedent has been that so long as the advice is not tailored to an individual, it does not fall under a regulated activity. What that basically means is that so long as me as a creator, let's say I have no registration and I'm just posting content online, I can go online and talk about the stocks I like, what I think people should buy. So long as I'm being transparent, meaning that I'm not misrepresenting, say promoting a stock without mentioning that I hold it, being opaque in that regard. And B, so long as I'm not looking over someone's financial situation and saying, this stock is a good pick for you or so-and-so. If I'm not going to that singular sort of level of advice, it doesn't typically fall under regulated activity. The tricky part is that sets a weird precedent where naturally, I can tell everyone which stocks to buy, but just not individuals. The crackdown we have seen has been on, again, when people aren't transparent with their disclosures, but we haven't seen much in terms of what people are or are not allowed to say in terms of broad financial advice.
This is a phenomenal segue into my next set of questions.
Great.
So, what are the most common types of bad or misleading financial advice you see online?
There's a lot. In terms of most common, so again, when it comes to stock picks, and to be clear, an amateur who researches stocks, tries to post their research and is transparent about their background, I think that's can even be productive, so long as they aren't, say, like over promising on what the performance can be. Uh, One of the dangerous areas is very overconfident stock recommendations with high promises of returns, thumbnails of like, this stock's going to go up 1,000%, 10x this position, like all these types of promises. That's a very common one that you see. Analysis will typically be very shallow. My full-time job is in part managing portfolios, but also dedicated to researching companies. And you just don't see the level of due diligence that is required to come to any sort of assessment. Tax advice is a really dangerous area. I wouldn't necessarily take your tax advice from TikTok. I've seen stuff around not paying your debt collectors and things like that because of weird loopholes in the law.
My God.
And things like that. There's always some semblance of truth, or there's some exception that's being referenced, but it's often being misrepresented or exaggerated to a degree that makes it false or misleading.
Okay, so you talked about a few things then. Are there specific or particular red flags that you listen to that parents and teens can listen to? Like you talked about listening to one stock, it can skyrocket, get quick rich. So is there certain phrases or claims or even just styles that are just huge red flags for you and you instantly start looking at them?
Yeah, one big one is anyone who uses their wealth as a credential. This is kind of a form of substitution because what they're trying to do is substitute real expertise or credentials with the image that they have those expertise and credentials. What they're trying to do is make you make the connection of this person has a lot of money, they're selling a course or something, they must have made that money from doing what they're selling. It's very easy to fake wealth online. There's actually one video I was able to rent a McLaren sports car for $250 for the hours.
That's
Um,
amazing.
and it was done to highlight, it's very
Yeah.
easy to fake this wealth. To be clear, I drive a 2012 Mazda 3 most days, so I do not have any sort of sports car. So that's one big one, is anyone who sort of leans on that image to try and justify their advice, or that they have these strong credentials.
Hmm.
And then generally anything that just sounds too good to be true, meaning that it's a high return and a low effort sort of combination, just tends to be more on the scam side of things. And, one thing you see in the finance space is that any sort of easy money in the markets is picked up very quickly by these massive trading firms. So there's no such thing as a simple pattern or a trading strategy that if you set and forget will make you all this money. Because if there were, it's already been used and arbitraged out of the markets. The stock that is a certain buy has already been bought up so quickly that the price has already pushed that opportunity away from others. So anyone who is on social media saying that they found the secret sauce should definitely be a little skeptical of.
Absolutely. Yeah.
Most often it's a lot more boring than that, and it should be, because that lets you focus on other stuff that lets you live your life to the fullest extent, rather than worrying about how much of a return you earned on a day-to-day basis.
I agree. So once you have these red flags in mind and the financial advice still sounds really good and quite boring, and you're like, oh, maybe I should follow this. What are some simple fact checking steps that a parent or a teen can make before following a recommendation they see online? Because some are good.
Yeah, I mean, I would say, especially when you talk about sort of basic concepts, a lot of the information is very good. A lot of people get the the foundational stuff correct. And a lot of people have that interest in educating. A lot of people start off with very good intentions as Finfluencers, and some of them still have good intentions. So I'm going to actually lean on, there was a great CFA report, so Chartered Financial Analyst Institute put out this research report called the Finfluencer Appeal, and they had three sort of suggestions of what to look for with the content you come across. And they were motivations, qualifications, and consistency. So the first one being motivations is to ask yourself, what are the conflicts of interest? So that can be if they're selling a course, maybe they're posting content to draw attention to that course. Doesn't necessarily make the information incorrect, but something to be aware of. There's a great quote by the late Charlie Munger of "Show me the incentives, and I'll show you the outcome."
Mm,
That definitely applies in the Finfluencer space as well.
yeah.
So that's one thing, is being aware of the motivations. The second thing is qualifications. In terms of looking up qualifications, there's obviously things like professional designations. CFP and CFA are two common ones. So that's Certified Financial Planner, Chartered Financial Analyst, Chartered Professional Accountant. There's all kinds of certifications out there, and all their websites host the names of their members. So you can always go and double check that someone actually has a credential that they claim they have. And if someone's claiming to be an advisor or a professional, you can also look up their level of registration. So there are websites like the CSA National Registration Search,
Mm.
where you can look up someone's name and see if they are registered to give financial advice. And my view would be, if they aren't registered to give financial advice, you should not take financial advice from them. When it comes to advice in terms of what you should specifically be doing with your money, generally it's better to stay away from people who aren't registered to give financial advice when it comes to those specific actions, especially when it comes to investing. And then the last one is consistency, meaning the consistency of the information across sources. So if someone is claiming, the RRSP works a certain way, for example, does that line up with other videos you've come across the topic? Does it line up with articles that you come across online? And ultimately, you just have to give yourself sort of a common sense check of, is this something that could be dangerous to my financial situation?
Mm.
If someone's really promoting a cryptocurrency or a stock, is that something that puts your money at risk with it? And if so, you should, again, be very cautious with what you do.
I love that. Okay, I'm going to add the financial pages that you just referred to in the show links as well. I love that. Of actually going online and looking up for their names. What are some actual creators who you think are genuinely doing a good job, including yourself?
Yeah, well, thank you. There's one group out of the US, 2 Cents is what their channel's called, but they do generally cover general financial concepts that would even apply here in Canada. They're a great couple. They are both registered financial advisors in the US. And I believe currently they're still supported by PBS. So they're actually a PBS
Hmm,
owned YouTube channel. So a
nice.
great resource for beginners. On the more advanced side here in Canada, there's Ben Felix. And he does really good research intensive pieces on various investing topics. So definitely more advanced, but great Canadian focused content as well.
That's through Rational Reminder, right?
Rational Reminder, yes, is the name
Okay.
of his podcast. And then he also
Yeah.
has a YouTube channel where he posts videos. I don't know if this would necessarily be everyone's cup of tea, but I like creators like Patrick Boyle and Money and Macro. Those are both people with background, in finance. Patrick Boyle has a background as a trader and worked on in financial firms for many, many years. And Money Macro is an economist, currently professor, I believe. I believe he's still teaching, based in the Netherlands, and he covers
Mm,
very high level economic concepts. So those are the few I've come across that I like quite a bit.
amazing. What is your advice for young people who want to start investing but feel overwhelmed or afraid of missing out because of all these online voices? Like you get really wrapped up because they're intense and they're like, do it now. And you're like, oh my God, I'm missing out.
Yeah, it's just as an aside, it's a really unfortunate consequence of the algorithm based social media sites that we have, is that they almost reward that sort of overconfidence. A video of someone
Mhm.
giving a very lukewarm take or a balanced view on a topic won't do as well as someone who's slamming the table and saying this is the best buying opportunity that's ever existed in mankind.
Absolutely.
So it is kind of an unfortunate consequences in terms of advice for how younger people can get started. The first place is always to educate yourself. So start with the basics. There are a lot of great online courses from reputable sources. The University of Waterloo has a free
Mm,
financial course that you can take. And there's also another YouTuber, funny enough, offers university courses. It's Aswath Damodaran. He's a New York University finance professor who offers his lectures for free online. That's more advanced, but all to say
mhm.
there's plenty of great free resources out there that you don't have to pay for an influencer course or the like to get this access to this information. Also, I'll go ahead and plug that my older videos cover the very basics of investing. They're very low quality in terms of video quality. I didn't know what I was doing for filming back then, but the information's good. And then, so that's the first place, is to get an understanding of what you're doing before you hop in. The other thing to highlight is I know a lot of people are really interested in the DIY approach with investing,
Mhm.
but it's worth noting that you can start investing with a professional and then always transition or transfer to a DIY approach once you get your feet under you, once you get a better educational background. A lot of people, unfortunately, hop in buying individual stocks before they even understand what a stock really is. They just know,
Mhm.
the stock's surging in value. I'm going to put some money into it to try and make a big return. My view has always been, if you have money today and you don't have the education in the background, start off with an advisor to help you through the basics and to help you get started. And if after a few years, if you are itching to try stuff yourself and you have a better understanding of the DIY approach, then you can always transfer at that point. You're not locked in with an advisor when you invest with them. And the big thing I would highlight is you don't need to have these skyrocketing returns to do very well with investing. When you do the math, it's easy to see that if you have time on your side, even a very moderate return can do very well for you. So over a 40-year period, if you're starting very early here, if you're able to put aside $500 a month, even if you earn just a 6% return, that will equate into roughly $1 million after 40 years. And the amazing thing is that 3/4 of that $1 million amount that you end up with is simply from your investment returns. Consistency really is one of the biggest factors that you can have in your favor.
Yeah, absolutely. I agree. Okay, so then what is one piece of advice to parents about helping their kids becoming financially literate in the age of TikTok and social media? What would your one piece of advice be to get their kids started?
One thing I would highlight is that it's very hard to get your kids to be financially literate if you yourself are struggling with financial literacy. That's can be discouraging, but one thing we do see is that financial habits tend to be generational. So the financial habits of the
Absolutely.
parents do tend to pass on to the kids.
Including the shame, which I find the most amazing.
Yeah, and that's
Mhm.
sadly one of the worst, most difficult parts about this topic is that the people who are in the worst financial situation tend to be the most discouraged from trying to turn it around because it does come with
Yep.
that shame. That's a very common experience. It
Hmm.
doesn't mean that you're at the bottom 1% of financial individuals. It's very common for people to be ignorant to their financial situation. But if financial literacy is something that you believe will be important for your kids, I think it's important to take that journey with them and look into the resources alongside them and take the same steps, right? I think discussing about money is one of the best things you can do because if you're open about finances, which is not very common, finances tend to be a taboo topic among families. But if you're open about spending habits, then those translate a lot easier to your child. And again, if you have positive financial habits, then being open about that with your kids can really help them with their own financial habits. So communication and being honest with yourself and assessing your own financial literacy. And if you don't have that financial literacy, looking into getting a professional yourself or introducing your child to a professional once they're at investing age to help them get started is all stuff you can consider doing.
The refrain I hear from all of my guests is just start talking about it.
Yeah.
Just talk about money, talk about how much things cost. So, last question then. What's one thing you wish every teen and young adult understood about building wealth?
I would say it's that with investing specifically, I would say 90% of the benefits of investing is captured with the first 10% of effort that comes with investing. Meaning that when it comes to the type of account you invest in, saving the money and putting it aside, taking a smart approach with your investing, most of the benefit can be captured with 10% of the effort that you could put into investing. 90% of the return you experience is going to come from the more basic approaches of how much money am I saving? Where am I putting that money? What am I spending on expenses? And in fact, there's a lot of research that shows that where you invest your money, whether it be stocks or bonds, tends to be a bigger determinant of your performance than which stocks you invest in.
Hmm.
So it really just goes to show that if you focus on the broad strokes and learning the basics and getting invested with a basic, smart, diversified, safe approach, that you'll capture most of the benefit that comes from investing. You don't, and from there, focus on a career that you can make a lot of money in. Focus
Hmm.
on how to increase your salary, how to improve your spending. Those aspects of finances are more likely to play a bigger role in how your financial situation ends up than the stocks or the cryptocurrencies you pick and research. I think a lot of people get that backwards sometimes, where they assume they can replace a solid career or income by just investing right or trading enough or doing enough research. Most of your gain is going to come from those other more foundational steps that you take. Once you get to a good foundation, You can explore DIY, but really most of the benefit comes from just setting things up.
This has been absolutely amazing. And thank you so much for coming on the show and giving us your time.
Yeah, thank you for having me on. I'm always happy to chat on these topics and keep up the good work. I think it's an important topic to discuss finances with kids, as we touched on, and for parents, and happy to contribute.
Awesome. Amazing. Okay, so if you'd like to learn more, check out the Plain Bagel on YouTube. You, along with the other 1.1 million subscribers, can watch along. I'll add a link in the show notes as well. Plus, also, I'll add a lot of other links that we talked about. So my big takeaways from today's conversation are, much like every single one of my past guests have mentioned. Number one, talk about money, talk about money, talk about money early and often. Share spending habits, discuss financial decisions, and normalize these conversations. Kids learn from your example. Number two, teach them to watch for red flags online. Anyone promising easy money or flaunting wealth as a credential is a warning sign. Teach your kids to spot these patterns. Number three, if the advice actually seems good and aligns with other advice you've heard in the past, check their motivations, their qualifications, and for the consistency. Before following advice, ask, why is this creator sharing this? Are they credentialed or registered? Does their advice match other reputable sources? Following these steps can help your kids develop confidence in making financial decisions and avoid falling for hype or scams online. If you found this episode helpful, please share it with another parent. Follow the show or leave a quick review. It really helps more families find these amazing conversations. Also, I would love to hear your topic ideas, so send me a note telling me your thoughts. I'm Christy Ray, and this is the Great Canadian Piggy Bank, helping Canadian parents raise money smart kids.